CBS News finds hundreds of U.S. companies paid more taxes to foreign governments than to Washington last year. 241 companies set aside $73 billion to pay taxes to foreign governments last year, compared to the $6.7 billion that went toward U.S. taxes. This comes as President Biden seeks to increase the amount of money companies pay in federal income taxes. CBS News senior MoneyWatch reporter Stephen Gandel wrote that report. He's with me now to discuss it all. Stephen, thank you so much for taking the time to join us. So first and foremost, how did these companies end up paying more for foreign taxes last year than for the U.S.?
Well, the biggest driver was the 2017 Trump corporate tax cut, right? What traditionally the way that U.S. companies, we thought, avoid paying taxes was they moved their operations or appear to move their operations to places like Luxembourg or Bermuda. But one of the experts I talked to said that it's the U.S. that has become the worldwide tax haven of sorts, right? So what you see is companies like what we found, like Netflix, that earns a lot of money, and they earn most of their money here in the U.S. They, after tax cuts and accumulated credits, they only paid a U.S. effective tax rate of less than 1%, 0.8% last year. But on their foreign operations, where they don't get all these benefits, their income tax rate was in the high 60%.
So who are these foreign taxes going to? What countries? What locations?
Well, we don't know. That's one of the frustrating things about determining what companies pay and don't pay in taxes. Companies, like individuals, like we know from Donald Trump, they don't have to disclose their tax returns. We get very little information. What we do get is a note for public companies and their financials that gives you a broad idea of what they're expensing for where, but they won't tell you what countries outside the U.S. these taxes go to.
So, Stephen, this week, President Biden introduced a plan to raise the amount companies pay in federal income taxes. Can you break down that plan for us? What does it entail exactly?
Yeah, so one of the big parts of the plan is that it's going to raise the rate. If you remember, Trump's 2017 tax cut took the rate down from a marginal rate of 35% down to 21%. Biden's plan will raise that back up again to 28%. There's also some credits in here for companies that move some of their operations, if they've offshored, move them back to the U.S. And there's some penalties for companies that try to move profit shifting, is what the Biden administration calls it. They try to move their operations offshore to save taxes. But a big part and a new part of this plan, the one that would attack the problem we're talking about, of these companies, again, like Netflix, paying an effective tax rate of less than 1%, is a minimum tax rate for U.S. corporations, which would be the first of its kind. That would be just based on the profits they report to shareholders. All companies in the U.S. would have to pay at least 15% of that in taxes.
I want to also take a look at, the fact that this week Treasury Secretary Janet Yellen said that she was working with other nations to try to establish a global minimum corporate income tax. Can you walk us through how that would work?
Well, the G20, other nations are already working on this. It works really that we can get an agreement for major countries, and it's hard to say that it's hard to think it would be all countries, but major economies, to say, okay, we're going to keep we're not going to cut rates any further than whatever number, if it's 20% or 15%. But I think from what we saw, what I saw in my reporting, from looking at companies' filings, the best we could tell, the Biden administration's kind of fighting the last war. Again, that response is about stopping companies from moving or appearing to move their operations elsewhere to get better, lower taxes. What we're seeing now is the problem is in the U.S. The problem's within our borders. That even if you talk about raising what countries say companies pay, it's these accumulations of credits and benefits. And so in the U.S., where we say now we have a 21% tax rate, you instead find that companies pay way less than that. And that's really the problem we need to address.
Can we zero in on those credits and benefits? In your article, you also mentioned how a variety of tax breaks and credits passed in recent years have allowed those companies to pay far less for U.S. taxes. So I just want you to explain that a little bit more, because it is just so crazy to me that, U.S. companies based here in the U.S. would pay less in taxes here than they would abroad.
So it's a variety of things. One of the main ones that creates a huge benefit for U.S. companies, and one of the companies that we looked at, Netflix, in our story, is the preferential tax treatment of stock options. A lot of tech companies pay out a lot of their executives in stock options, and for their profits, for their books, reported profits, and if just using Netflix as an example, they get to say that those stock options that they gave to people were worth $400 million. But when they report their taxes to the IRS, those same stock options, they get to say are worth $750 million. So there's a $300 gap, and that $300 million gap, and that they get to write that $300 million gap off on their taxes. That's just one of the many ways they do it. Netflix, to use another example, they spent $1 billion in R&D. 10% of that, $100 million, they get a tax credit for. And then there's other things. But a big difference has been this Trump's tax cut, which just a few years ago, 2017, there were only 150 companies that paid more taxes overseas. Now we have almost half of the S&P 500 doing that.
Some fascinating reporting. Stephen Gandel, thank you so much.